Hello, everybody. I trust you are all well. Sorry, I was muted, which is not very good. But here we go. Welcome to Live Trading Profits on this beautiful Wednesday. By the way, I hope everyone has now got the links to book yourself onto our Wednesdays at the Market with George, which take place the second Wednesday of every month. I'm in the market, 4 sessions, 2 hours each. The open of the Asian session, London session, US markets, and the close of the day. So the links are on the ATW page, and maybe they'll be posted into our chat box. So let's have a look at what is happening today. Now, what I've done, and I'm going to have to do a little bit more work over the weekend because my charts are getting quite cluttered. Put up all the daily timeframes, and I can talk you through what I'm looking at. So don't worry about the clutter. I have my MT5 also open. So I'll put that up just to show a bit of clarity where things look a little bit congested. Euro, let's start with the euro. Key levels that we're looking at, the high of yesterday, the low of yesterday, but this high here, okay, this is a key level that we need to watch. So looking at this whole pattern, market pull back, market came down, pull back. That is a lower high. It's a key lower high in March because our high for the month is somewhere way back here. So just leave that marked on your charts and see where we get to. Now, if you just have a look at the euro, it's not terribly enticing at the moment because of where we're at. We're right at moving averages, so we are going sideways trading range. And look at yesterday, trading range price action. So just for a bit of clarity, sorry guys, I just realized my video is not on. So anyway, there's my video. Trust everyone's doing well. So just for a bit of clarity, let me share my MT5 so you can see what we're talking about. I haven't marked anything yet on the MT5 in terms of key levels of support and resistance. So that's probably something I'm going to do just for the higher time frame so that things don't get cluttered again. But this is what we're looking at in terms of the euro. I mean, if you ever look at it, if you had a choice to come and trade today, if you were given an option, would you want to trade this? If you love trading ranges, if you love reversals, yes, for sure. But there's probably not much point to jump into the market, look for opportunities here. If today ends up as an inside candle, that would be good. Possible breakout mode for the bears. Then you look to trade, going short. If we break out above and we close and we're above moving average, we're up at the top of the trade range. You're also looking to go short. But that key level, you must just keep marked on your chart. So euro, it's there, but I am not actively looking for opportunities to trade euro. So if we just go back to what we're looking at for euro, that's why I'm saying have a look at it. So what I do, because I'm not going to be trading it, there's no point worrying about it, but something might set up. So just put it on the 15-minute. You can leave it on the 5 if you want, but that means you're going to have to keep on going back to it. But if you leave it on the 15, okay, just pop back every now and then, every hour to have a look at it. If we get a breakout, okay, break beneath the 50% midpoint of yesterday and a pullback, then you can then drop it down to the 5 and look for an opportunity to go short. But as it is, nothing particularly enticing. We have options on the day. So let's have a look another. I'm just going to one more, a little bit more exciting in terms of what's on our watch list. Hang Seng 50. Okay, Hong Kong 50, Hang Seng 50. Looking for opportunities to sell. Now, this one is quite interesting. Again, I will go down and show you on a cleaner chart. But if you just have a look at yesterday's low, yesterday's high, so this green candle here, and look at 3 candles behind before that. Bear inside candle, we have a bull candle, we have a doji. Now that is going to be just ringing alarm bells and making you wonder what is happening. What is happening to the case of the bulls? Because with this huge bull candle that we had with the triple red news announcement, the bulls had an opportunity to completely change and take control of the market. All they needed was follow through. On the next day, they didn't. Then we have a doji, and we have another opportunity for them close above the moving average, because remember, they just want to change the structure. And the structure of the market is everything that's happening from this bear breakout here, but more importantly, when the market broke beneath the low of 2021. That's what's key. That's the key thing. Otherwise, up here, it could just be a trading range, double bottom, and you go up. But the fact that the bears were able to break beneath that, that's what the bulls want to change. So we are in a sell zone, which means anything beneath the low of 2021, which has to be tested, and it's been tested, the bears want to keep on selling, of course. And why do they want to keep selling? Well, because they want to make sure that we start to move away from the low of 2021 and create a new low for this year. Still early in the year, but they're going to start defending this and see how far we can get off. So this price action is not a surprise. The bulls are strong. A few more candles would have been way up here, and support becomes resistance, becomes support again, but we're not there. So just to get a bit of clarity on that particular market, and I think I'm looking for shorts. You must have keep that on your radar. There we are. There is Hang Seng 50. So it's a little bit clearer without all the lines on it. Yes, we have closed above the moving average, but no trend has been created. A flat EMA is just trading range, of course. And at that point, when you're in a trading range, the EMAs are not that important. EMAs only become important when you are in a trend, because they help us, they show us the direction and the strength of the trend. Just as you see, when the market was coming down here, the market tracked, price action completely tracked away from the 10 EMAs, so very strong trend until this happened. So that's why I'm looking for shorts. Basically, failed breakout above this trading range here. And the trading range is this is the low of the trading range. So this particular time on the lower time frame, I'm looking for an opportunity to go short. I'm not looking for the market to go down here. Hey, if we get this surprise and you're in the market, beautiful, take it, enjoy it. But trading range is selling at the top, and you're looking to take your profits at the bottom. When you get to the bottom, if the market doesn't break below it, you're looking to buy from the bottom and carry on the trading range until we get a decisive break one way or the other. So if we drill down now to the 5-minute time frame. So it depends where you were in the market. I mean, this is quite interesting. So I was up looking at the in the open of this market from when it opened here, trying to find opportunities to trade, and I define the open of each market as plus or minus the first 2 hours. That's where I'm going to try and find opportunities. Then when that finishes 6 p.m. my time or so, I'm going to do errands, going to do stuff, and come back into the marketplace. So we had on the open bear candle, sideways price action, if I can just say that. Okay, when I say sideways price action, that's like trying to take a shortcut through the bush. There's no such thing as a sideways price action, because then people say it's noise. There's no noise. There is price action. So inside candle, tails on top or bottom, breakout mode, but of course, because of the tails, we know there's a problem. The bulls are buying in to the close. Then we had an outside candle here, trading range price action, tails either side, followed by an attempt by the bulls, and then failed breakout. So measured move of this little trading range got us to the high of yesterday. So that's the high of yesterday. And when you get to a key level, high of yesterday, market is coming up as key level of resistance. You want to see what happens to the bulls. Okay, breaking out, almost inside candle, breaking out. You want to see follow through, but we don't get follow through. So that immediately creates a problem. Then we had a wedge pattern, 3 push pattern. Now, when you get a 3 push pattern, what you want to see is the market resume off the wedge top. You want to see the base taking control of the market, candles close beneath moving averages. Then you want to see a resumption, because the bulls who created this want that to fail. So the market has to come back and try and test that. When you get that, you get your double top. Okay, so that would have been level we're looking at. So yours truly was looking at this and saying, man, I'm going to get money for bread here. I'm going to get money for bread here. And it's occurring right at the end of my 2-hour slot, which is perfectly fine. But let's have a look at it. Immediately, we got a problem. At the wedge top, market went up, came down, went up, came down again, third level. While I'm anticipating a sell-off and then a double top, lower high, whatever the case may be. Remember, we spoke about many times the 6 candles of separation, that between a level and the next level, for me to say that's a double top or a double bottom, I clearly need to see 6 candles of separation. We didn't get that, so that effectively operates as one top. Okay, when it's within 6 candles of each other, I just see that as one particular top. Any questions or thoughts, just pop them in the chat box. So with that, considered as one top, so that's still a wedge top for me. It's a failed breakout above the wedge top, but it's within a couple of candles of it. So the forces creating the wedge top are the same forces creating the reversal, which is good for the bears. So what you then want to see is an opportunity for you to get the market to test back at that level. Okay, we didn't get a test back at that level, but we had two, 3 strong candles, 2, 3, second and third candle, closing beneath the moving average. Didn't get a lower high. By this time, I'm not in the market at this particular stage, but if I had been, that's not the lower high I would have been looking for. I would have wanted, simply because it's an outside candle. I don't consider outside candles. It's a trading range, so you need to see whether we try and break out above it or break beneath it, and failed. So failed to break out, create a double bottom. Happy for the bulls. Bulls would have said, okay, I've seen all of that. Fantastic. Seen all of those forces. We've just pulled back. That's a higher low. Now confirmed higher low here, or failed breakout higher low. So the case for the bulls is equally as strong as the case for the bears at this particular point, until you get the market coming back to test above here. Now we have a trading range. The market breaks above that trading range. You want to see if we get there. It didn't do that. Later on, there's a trading range there. The market breaks beneath this trading range. You want to see if it gets back to that particular low. So trading range price action. If you're a bull, would you take this trade? Yes, if you want to take a trade in the middle of a trading range and put your stop down here, 50-50 proposition, that's if you're taking a trade in the middle of a trading range, you can do that. Just manage it. If it doesn't go your way, it starts to turn, you come out of it. But the point I have to ask is, why do you want to take a trade that reduces your probability of success? The only time you want to take a trade that is less than 60% probability of success, and of course it can be more if everything is set up, is if you are trading a reversal strategy. You open the market reverses, you take a trade in the area, but you could be wrong. That's where you go lower than 60% probability of success. Middle of the trading range, if you're prepared to use a wide stop, by all means, go ahead. But I don't want to reduce my probabilities when I can manage them. In any case, market came back, gave us a double top with the top of the trading range. And once you see a double top, I'm going to delete this while I'm talking. Okay. Once you see a double top, now you're going to have to say to yourself, is this double top the one that I want to trade? If I take it here, I put my stop there. Once you see a double top, what do you wait for? You wait for a lower high. So you could consider taking that. But again, you're still within that zone of the middle of the trading range. You want to take it, you put your entry, not here. Okay, double top, you wait for a lower high. That's a lower high. You could take your trade and put the stop up here. Now, what will be the problem with this particular lower high? That's the question we've got to ask ourselves. So if you're looking to take that trade, the only problem with it, when you take in that lower high, now we see it looks fantastic, but at that particular point, after that double top, there is nothing within here that can convince you that the bears have taken control of the market. Okay. Yes, you're in breakout mode because you have a double bottom, lower low double bottom. You have a double top, which means whenever you have a tight trading range, double top, double bottoms, breakout mode, at some point the market will break out of either side and then hopefully go for a measured move. So here, nothing would have convinced me to take a trade if I was in here, because there's no successive bear candles after the double top. But anyway, if you thought, hey, I'm going to take it, low probability, your stop must be up here. Then you're hoping for a measured move. And yes, you would have been rewarded if you've taken that and held onto it. But that's not a trade that I would have taken, because out of 100 trades, if I took that consistently, I'm going to lose more money than I make. In any case, so now there is a reversal strategy that I'm thinking, okay, might set up. Okay, when you have a wedge pattern made up of small breakouts, there's a potential that on the reversal, the market might turn. So a wedge, remember, is 3 push patterns, and we're looking for a small breakout. So that's the first attempt to break out with a double bottom. Then if we have another breakout, a small breakout, this is pretty larger than that one, but that would qualify as one. So a small breakout of this breakout is essentially 3 pushes down. First push, second push, third push. So when you see that, I'm like, happy days. All I want to see is market come back and test up here. And if I get a test up here, happy to trade going down. So then the market closed. So what we had instead was this reversal here again. I'm not going to take that trade right ahead of resistance. I want to see the pattern come back, give me a bit of momentum, confirmation, and sell off. So the market went sideways, and at the close, it was a bull candle. Okay, so market closed just at it's about an hour, 50 minutes ago. Then they opened up 15 minutes ago, 30 minutes ago. So the market does close for 45 minutes, the Hang Seng, Hong Kong Stock Exchange. So on the open, I'm kind of looking and saying, okay, hopefully if my pattern holds, the bulls will follow through, give me a lower high off here and look to go short. But we had a gap down on the open. I got to wait back to the waiting game. So am I still bearish? Very much so. But I need to see the setup. What I'm looking for now is for this gap to be closed at some point, and it can close with 1 candle or 2 candles. If that gap closes and I get a double top or a lower high, I am going to look to go short. So this stays on my list for shorts. Patience is the name of the game. UK 100. Okay, so this is a daily chart. Now, let me just show you on a clean chart. Then I want to come back and talk through what we're seeing. I think this is very interesting. Okay, so there is our UK 100. Okay, so we're going to talk through this and I'll give you all the kind of levels of support and resistance. I will point out to you, the present high of the month here. This bull candle here, which closed that gap. The market kind of closed, kept down a little bit. A huge bull candle cleared, a lot of lows here. Significant level that we must watch out for. It's a lower high, but so that we're going to talk about. Then I'm going to explain to you also the measured move out of this doji. Yeah, you're able to see it, but just in case it's a bit cluttered, and all the factors that making me think that I want to go short on the UK 100. Now, for those of you who joined me in my brief, I think it's 7-minute visit in live in Trading Buddies on Monday. So happened that by the time that I got in, I was in a bull trade, which was pretty profitable on the day. And that was here. Okay, I think we'd pulled back to the 50% level and the trade was in there. But today it's a different mindset. I'm thinking bearish. So let me show you with a bit of clutter on it why I'm thinking bearish. So again, a bit of promo. I have to learn how to promote myself. Wednesdays at the Market with George is now live, free to everyone, free to the public, the second Wednesday of every month. Links are on the ATW page. So you can choose, I'll be trading the markets live. So all the 7 markets, 3 opening sessions, and then the end of the day. GMT time. First session is the open around the open of the Hang Seng, Hong Kong Stock Exchange. UK 100 starts to trade 15 minutes early. So 1:15 a.m. GMT, 3:15 South African, 9:15 Singapore. 2 hours. That's the open. Of course, while we're looking at the Hang Seng 50, just looking at the UK 100 because those are live and open then, actively open, just opened. We also look at what's happened with the other markets that we have been trading, gold, euro, etc. Then we come to the UK session, and that's the European London session. So that is 9 a.m. to 11 a.m. South African time, and we'll just roll on to this particular show, which is 11:30. So that would be 7 a.m. to 9 a.m. UK time. And then, of course, 9:30 we come into this particular show on the Wednesdays. You would be 3 p.m. to 5 p.m. In Singapore, and then 5:30 we come into this show. Then we do the open of the US markets, and my time from there is 3:30 to 5:30. So that's 9:30 to 11:30 p.m. If you're going to stay up that late, Hang Seng, Singapore time, or 1:30 to 3:30 GMT time. Then we come back and close off the day, 9 p.m. to 11 p.m. my time. If you want to get up with me, 3 a.m. to 5 a.m. Singapore time, 7 p.m. to 9 p.m. So that's Wednesdays at the market, second Wednesday of every month, open to the public. Then for subscribers with a subscription going on, you have the same opportunity one-on-one or in a closed group if you've subscribed to it, the third and fourth Wednesday. So you get to trade with me live 2 sessions, 2 Wednesdays close to the market, and the other open Wednesday, which is the second Wednesday, second, third, and fourth Wednesday. That's a promo from George. Okay, so UK 100. That level is key. Please have it marked on your charts. I've just called the high of 25th February, largest bull trend bar. And that's the largest bull trend bar in the past few years. I mean, so it's really important. The market is going to notice that. You need to have that as a level of resistance. If it's that significant, it has the potential as a magnet to pull the market up. Okay, so we wouldn't be surprised if you just get a huge push to get to that market and then a reversal. However, the fact that we had that candle, the largest bull candle for years, which closed right up here, and then the very next candle, huge gap down, okay? And it was a full inside candle at some point, but selling. This whole zone is a very strong level of selling. Bears are active here because bears, they want to defend not just that high, but the bears want to defend this level up here, which is our present high of 2022. So this is a sell zone. We are in a sell zone here. That's one factor. Another factor to bear in mind, bringing closer to presently where we are. I'm just going to move that there. That's for today's trading. We also have the high of March right here, high of March 2022. So that's another level of resistance. Okay. If it's a high of March, it means we sold off from there. So the bears are actively defending the high of March. We've just tried to break above it. The bears want that to fail. So this can be a new high, but the bears want it to fail completely. We also have, okay, high of 2021, level of resistance, we broke above it. So kind of bounced off it, broke above it with yesterday's candle. And the bulls, what the bulls want is to demonstrate strength. And how do they demonstrate strength? Is to give us a follow-through breakthrough candle. In order for them to give us a follow-through breakthrough candle, they have to overcome all of this resistance. If the bulls do that, then man, just close your eyes. If the market closes above here, go look for at least a bull breakout, try and test that high. But the point is, at this level, okay, support became resistance, broke above it. The bears want that to fail. So that's an additional selling factor. Another key factor is this trading range here. Okay, so market gap down, we know most gaps closed, so there was an attempt to close it. And we got here inside candle. Okay, we expect the bears to break out, but at some point, huge bull candle failed, created a doji. Now, that doji is a trading range. Okay, at a key level, trying to reverse the market after breaking beneath this level. Okay, so if you I've just clicked on my line chart to look at my closes. There was a low close at that point that we broke beneath, and that doji was almost testing that low close. Okay, remember I said when you have trading ranges and you're trying to get some clarity, just pop in the close and look at how the market has been closing. It might give you some insight to something that you might be missing. Okay, so that trading range controlled the market for a couple of days with an inside candle. And whenever we have an inside candle, we expect a higher probability, 60% chance of a breakout in the direction of the candle, but we know most breakouts fail. The little songs that play in your head, most breakouts fail. And when we saw that and we had the bears breaking out beneath that low, failing to break out beneath the low of the trading range, but we had the bottom of the trading range, so the buyers step back in. Nice reversal candle, low test, low of the trading range, failed breakout. The bulls followed through, fantastic, bullish strength, follow through. Bulls an opportunity again the next day, but selling during the day, attempted to reverse that bullish price action, which failed. Then the bulls controlled the market. So this red line is low of yesterday. Bull follow through, and we come into the level of resistance. Kind of bounced off that instead of breaking through. Now they're just broken through and trying to get back. But you can see the measured move of the breakout above this trading range. So that level there, okay, is just this. The high and the low of that trading range, the measured move, because if we break out above any trading range, whoever has created the trading range, if they got strength, the very least they want to do is get to a measured move. When you get to a measured move, take your profits, take partial profits, take all profits. So not only are the bulls selling, at the measured move of this triangle. Okay, not only are the bulls taking profits, the bulls are taking profits, they are selling. We also have selling by the bears defending all these levels that we spoke about. So a very strong area, of selling. The EMA crossover 21st March. How do you read that? You're talking about somewhere here. I don't trade EMA crossovers, if that makes sense. Okay. But let me clarify myself. When I say I don't trade EMA crossovers, it doesn't mean I don't look at EMAs. Remember, I've said I use the 10 EMA as an indicator of strength of a trend. So when a 10 EMA is rising, I'm pretty happy that, you know, the bulls in this case are strong as long as this is rising. When the market breaks a 10 EMA, the strength of the trend is weakened, but it doesn't mean at that point that it's a reversal. I know that the market can respect and respects the 20 EMA a lot of times. So I'm not trading EMA crossovers. I know some guys become pretty good at that. I don't do that. So I actually hadn't even paid attention to that until you asked the question. Okay, but good question. So if you trade in EMA cross, listen, I've been in the game for a long time. I've traded everything. I've traded stochastics, RSI, all of this stuff. I've traded crossovers, and my brain just couldn't process this stuff until I started just looking at price action. But if you found a way that works, then the EMA crossover is just one of the things that you tick. Okay, it's one of the factors that you tick. You can't just trade off it individually. Okay, so with all of that whole thesis, I'm just arguing that we are in a potential sell zone. So let's wait for the opportunity on the 5-minute time frame. UK 100. Okay, now this shape is absolutely beautiful. It's a trading range. I just call it, for lack of any better way to describe it, a V trading range. Now, it's not mind blowing to see how I came up with it. That looks like a V. Okay. The reason why I particularly like this when I see them setting up. So this also, until we had that, was it's a V trading range. And let me explain why it's important now, why it's one of the things that I tick off. Better, let me put it that way. Whenever you see a trading range, remember I've shown you, you know, one bar trading range. So if this had dropped here and into the small body, tails on top, tails on below, we put the measured move. This setup is a pretty powerful setup that could give you an opportunity to trade, to make some money, always trading. So the low of that to the high of that, that will be the first opportunity to go short. Now, I don't want to go short anywhere down here because I'm going short at the bottom of a trading range. You don't want to do that. Bottom of a trading range, you want to buy. So let the market come down, double bounce, double bottom, whatever, it doesn't matter. What I'm waiting to see is a resumption of the trend to get into this upper third level, the upper third of this particular level. Okay, so this is the current high of March. Okay, so somewhere in here now it's a little bit cluttered. There's the current high of March. Okay, that's the line that we're looking at. That line. So I'm looking for the bulls to simply say, hey, double bottom, let's buy this thing. You know, they can resume the market, push it up, come back, create a higher low, perfectly fine. If it sets up neatly, if it was a double bottom here and give me a high-low double bottom, happy to trade it, but I'm only trading until I see a reversal pattern. Now, I don't do that often. If I've got my mind stuck that I'm looking for a particular pattern, I don't like to say, hey, there's some profit, let me take it. Okay, you could do that if you're able to change your mind, pause, give yourself 3 candles, and then be able to jump back in. So that you can do. I'm not saying you can't do that perfect setup if you get that double bottom high low. But where I'm looking to trade, because of this particular pattern, when I see that, I really, really get excited. Anyway, within this upper third, let the market come back and test that. But how it comes back is pretty important. I'm now looking for wedge patterns in here, 3 push patterns. Market goes up. And the reason we look for 3 push patterns, because if the market tries to do something 3 times, it's likely to say, hang on, this is not working. Let's go the other direction. That's why when you get a double top or a double bottom, that's 2 times, 1, 2 or 1, 2. Wait for the 3rd entry. That's your 3rd push. So may not be exactly that, but I want to see some form of a 3 push pattern, which means to me the bears are defending the position and the bulls are trying once, trying twice, and failing. Now, will this happen in this particular session? It may, okay, because you still have the US Open coming up in 3 to 4 hours time. So there's still time for that to create. If that happens and you get a lower high, that's a trade that you gotta take with your stop up here. Why do you have to take that trade? Because you're not only aiming to get to the bottom of the trading range. This is one of those trades where you want to do your best not to take profit, unless you have to go to sleep or go to work, whatever, then happily take profits because the market might bounce. But what you want to do when you take a trade like that is anticipate that when you get to the bottom, there will be an attempt for the market to reverse. So that might happen during the open of the US markets. If we got up here and we're selling off, or this might only take place up to the open of the US markets. But when you get down here, you can expect a reversal, but you got to hold on to your trade. Why do you have to hold on to your trade if it sets up? Because if it sets up, the potential of this trading range is a measured move all the way down here, which would mean that the market will have momentum to smash through these levels. So whenever I see that kind of V pattern, we tried to break out above an earlier one, failed. So that's good. That's good sign that the bears are in control. And you can see strong bearish price action to the low here. Now, I've seen this pattern hundreds of times. I don't know how many times. 60% of the time, if you wait for it and if it sets up and you trade it correctly, you will not only make money to get down here, don't tighten your stop too early, just get it to break even and leave it, okay? Which is quite interesting because you might be in a 2-to-1 by the time you get you and you're like, oh my goodness, let me take the profit. Don't take the profit, leave it in the market, because if this pattern works, which it will do plus 60% of the time, you're going to have a break down to this level. Okay. Will we get it? We hope we do. Now, question is, George, if it works 60% of the time, what happens the other 40%? Well, the other 40% is beautiful still, because still a trading range, still the same forces. If we break above the trading range, okay, if you break above the trading range, so the other 40%, if it fails, so if you take a trade in here, okay, and you're watching it and you're saying, hey man, it's not going my direction, you gotta kick into your trade management. And kick into your trade management, all you simply then saying is, I'm prepared to get stopped out, I'm prepared to close the trade and wait to see if I get a breakout, pull back, and then trade in the other direction. But my present thinking is that's what we need to wait for. Okay, let's just check. Yeah, okay, so as I said just on that point earlier on, anything you pick up as a tip on how to trade, while you're still learning and while you're still experiencing, add it on to the list of, I call them the confluence of factors, the things that have to come together. For example, I'm saying that V pattern is likely to work. So that's one factor I've already seen. If I'd looked at it and I'd seen two-sided price action in here, I would have said, bears not strong, but the bears have already shown strength. That's a tick. When the market pulls back and I see those three pushes, that's a tick. And I see a test of, I think we moved that when you're on the daily, a test of the present high of the day. That's a tick. When I see the reversal candle or reversal, it could be multiple candles. So you tick, 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 then you execute. So if the EMA crossovers appeals to you and you've looked and say, hey, that makes sense, that just becomes one of the things that you take. The only big caution is that when we are in a horizontal trading range, this one is a V trading range, your EMAs are not as influential on price action because it's an area of agreement. Price, guys are agreeing on the same price, so they're going to go sideways. So you've got to wait for a breakout. Another quick look before we go. US 500. Market will open shortly. Well, the market is open, but the New York Stock Exchange and all those big boys are going to come in. US market's going to open fully, and there's a cleaner chart for us to look at. So you can clearly see, and I'll talk about this, there is the high of February. So if you extend that, that's a magnet that can pull the market up. We've just broken out above the high of March so far. Good breakout candle. Question is, why did we have a doji after that? The bulls were strong after breaking out above the high of the present market. Follow up with another strong bear candle, another strong bull candle as confirmation of the breakout. Okay, but we didn't get that. However, still creating higher lows. So that's probably a magnet that could pull the market up. So I wouldn't be surprised if the market went up to that particular level, and then we look for selling. So let's just quickly put that up for us. Okay, trying to share. There you go. All right, so just a few factors. That for me is a key level, the high of February. If you look at yesterday's high, so there's the low of yesterday, there's the high of yesterday. If you do a measured move of that, you come into just above that. So the bulls, even though we had that doji, their goal is to get a measured move and get to that level. If we get to that level, does that mean that we're going to break out? Or there's other levels to look at, which this little trading range that we had here that they broke above. We spoke about that previous high of the month, low of the month, measured move of that is up here. So there is forces that can pull the market up. So going in to the open of the US markets in the afternoon, I'm looking to see if the bulls are going to break out above the high of yesterday. And if they do that, do they have enough strength to overcome all the selling force to get to test that high? So even though we break out, and if I see an opportunity to go long, I'm going to take it. But I'm going to be fully aware that there's a key level of resistance coming up. So if the market starts to turn and I'm in a trade, then we must be able to get out of that trade pretty quickly. So the 50, there's a key lower high in February. So that's what we broke up above. There is the 50% of yesterday's range. So we're still in the upper level of the market. I mean, if you look at that trading range there, okay, we are at the measured move of a trading range. This trading range here. So in here, that's when I want to see if we're going to create a double bottom and a possible higher low, then track it up. If you look at the price action, yes, bearish, but it's two-sided price action all the way, except for this break down below here, but we've reached the measured move of that particular price action. All right, guys, I have exceeded my time by 34 seconds, but thank you very much. And we'll see you again. Bye-bye. Thank you, Mike.